Welcome to Capitalizing Your Life, the podcast that shows you how to take control of your money, build lasting wealth, and create financial freedom using the infinite banking concept. If you're ready to make your cash flow work for you instead of someone else, you're in the right place. Here's your host, Glenn Yaney.
Today, my guest is David Befort and Paul Fugere, host of the Wealth Warehouse podcast. Welcome, David and Paul.
Hey, good to see you, Glenn. Good to be on the show. You almost got our names right.
I tried. I'll try.
No L in mine. No relation to the Wolf of Wall Street. So it's no
Right.
L, just Befort.
Oh, geez.
I definitely don't want to be related to that dude.
Could be fun.
Go ahead,
Yeah.
Paul.
Oh, no. Yeah, I think you did okay on my name, which is normally the name that gets messed up.
Yeah, cool.
if you're-
I tried to use the hands, but so really just a little background. You guys are secret mentors of mine. I have listened to over 200 of your podcasts, I believe. Listened to every single one. I went backwards, of course. I start from the front and then you go back all the way to the end. And really, I believe your podcast is my favorite podcast. I was excited to have you guys on. And with that, really taught me a lot about infinite banking. So I just happy to have you on.
Appreciate that. So you started from the most recent and went back to the very beginning.
Yes, I do
that's
things completely backwards. That's how I work.
That's the great thing about it, though, is because it's not chronological. It's all evergreen. Every episode stands on its own. So that I've just never heard anybody who did it like that.
Yeah,
That's cool.
I don't know how to do it on the iPhone, so I just keep pressing the next one.
Oh, yeah.
So we could start with David first. And really, the question I always ask is, what was the problem that made you find infinite banking?
Yeah, that's a good question because you got to start with the problem.
Yep.
Man, I was introduced and I didn't find it. It was given to me. It was shown to me by somebody. All I did was I opened my mind enough to be able to explore it and consider it as an option. But back in 2010, a good friend of mine who I'm still a business partner with today actually introduced me to this book called Becoming Your Own Banker. He sent me a copy and asked me to read it. And then we engaged in a back and forth, mostly email, for like 6 months with me asking my questions. But the problem, I guess at the time, we were just coming out of that 2008 crash that anybody who's 30 years old or older remembers, at least somewhat. But I didn't, being in the military at the time, I was active duty Air Force, so I didn't really experience the crash, you could say, because it didn't affect our income and all that. But the only things I had exposed to me at that age financially were traditional finance, TradFi. Hey, you're in the military. That means you should go over to this brokerage house that specializes in working with military, and they'll just tell you what to do with your money. So I did that. I actually I opened 2 whole life insurance policies for $50 a month. I even paid on those for like 2 years. And then I was like, this is stupid. I'm quitting. I'm going to do Dave Ramsey and buy term and invest the difference. So I bought term and I didn't invest the difference because nobody does. But the problem to me was nothing really quite felt right. I didn't know what it was. I just knew there's got to be something better out there than what I'm being sold from all these brokerage houses, from these financial advisors who come visit the military bases and give us their spiel. And I thought, I don't want to end up like everybody else, because most everybody else is broke. In the wealthiest country in the history of the world, with the most options for becoming wealthy than any other country in the history of the world. And 90% of people are broke as a joke. And I didn't want to be there. So my eyes were open and I was open to learning something non-traditional, non-mainstream. And once I caught the concept, I started implementing immediately. And I've been doing it for 16 years now.
And that's kind of how you met Paul also, isn't it?
Yep.
We met in the military. I'll let Paul tell that story.
In the service.
Yeah.
Yeah. My path was similar to Dave's. I went to that same brokerage house, except I went like all in.
Yeah.
And by the end of my time with them, we owned 12 whole life policies with them, but non-participating, right? Non-dividend paying.
Wow.
But still, build up cash value.
Can I ask you a quick question before we go?
Yeah.
How do you get 12 policies?
OPIs.
Like when you get into 12 policies, it turns into like I could understand with infinite banking, we build up the policies because we're building our bank. How do you get 12 policies on a regular whole life? Like just a regular structure?
Yeah, just regular vanilla whole life. When I was originally underwritten as a second lieutenant, I was in flight school. they had what's called in the industry known as an OPI, O-P-A-I, and that's an option to purchase additional insurance, without additional underwriting requirements, right? So every 3 years, I was able to add $50,000 whole life policies without going through underwriting. And I exercised all of those options. And so did my future wife. She was in Hawaii as a lieutenant. We had very similar, almost identical portfolios, to be honest with you. And by the time we got married, we kept buying OPIs and $50,000 chunks, bought bigger policies, had no idea about infinite banking concept, never heard of it, didn't know.
What was the theory of continuing to buy the whole life, though? That I guess you're just...
At the time, I didn't have, I would say my financial education level was extremely low. I was listening to my certified financial planner, my CFP, who I really liked.
Yeah.
God rest her soul. She was a great lady, but she's like, you're going to need more whole life. She was right, but just in a different way. I ended up with $800,000 of death benefit by the time I got done buying all those OPIs, probably $40,000 of cash value. I was still upside down cumulatively, even though I'd owned those policies for, 15 years.
Wow.
But I was still, as we know, all three of us know, with dividend paying whole life insurance, your break-even point's much earlier. But anyway, Dave, 2018, we had deployed together in 2013, 2014, we're in Afghanistan at Bagram Air Base. And just like-minded guys. And then fast forward a few years, he'd gotten out of the Air Force. I saw him on a podcast about house flipping. And I'm like, what's he doing? So I reached out and I was like, what are you up to? And got talking and did some private lending to him. I made my first private money loan to him using my self-directed Roth IRA. And then out of the blue in 2018, he sent me The Case for IBC, which is a book that had just come out from the Institute. And here's where I get to the problem is I always knew, because I'd asked my financial advisor, I'm like, what am I supposed to do if, I do a career in the military, then I retire, but I've got all my money in a Roth IRA or regular IRA and the 401k, the thrift savings plan. What if I want to do something else, but I've got all the money over there? At the time, very little liquidity. And they never really had a good answer. So I always knew I was always looking for something else. I just didn't know what it was, process-wise or product, right? And then he sent me that book, and he'll tell you, and we've told the story in our own podcast, but he'll tell you, like, I read that book, I knew I had clarity. I knew exactly what I needed to do and just had to wait for him to get licensed, and then bought 4 policies, 1035'd all of my old policies, so 10 of them. I left the kids' ones in place because they were so cheap, it didn't really matter. But moved all that cash value over for my wife's policies, for my policies, and jump-started my new dividend-paying whole life policies.
That's awesome.
And then
He was my first client.
yeah, easiest client, best looking client,
All the things.
all the things.
Yeah. So it sounds like very similar to my story for me, I was maxing out all my retirement funds and doing what I thought was supposed to be done, but really just blindly, we call it investing, but it's not being categorized correctly. It's like this, you read enough about index fund investing. It's like, okay, well, it's always going to, what they would say is it's always going up and to the right,
Of course.
And then I started thinking about it. I'm like, but what if it doesn't? And what's the thing that's going to keep it from doing that?
Right.
It's like interest rates have always been going down and to the right also for the past 30 to 40 years. What happens when they go back to, normal returns and stuff like that? And that's the one thing that really changed my thinking. I was like, this might not be good for long-term index fund investing is what I thought. So
Yeah, I think after that, I had been investing from early 2000s through 2010 in the market. And I remember one time after the crash in 08, maybe 2009 or something, I was in a hotel room and I was like, I'm going to dig into my investments. And I tried to determine how much I had put in, my face value, and how much it was worth now over that number of years. And the best I could do, was very difficult to find those numbers. It was like they were hidden very well. I could hardly tell how much I'd actually put in when I look at my statements. And what I came up with by just back of the napkin math, I was like, wow, my money grew by 1% per year over the last 5 years of investing. What am I doing?
yeah.
That's when I got a little disenfranchised and was very open to new ideas. Because up to that point, I was like, hey, I'm going to work on being a fighter pilot. I'm going to become an expert at my craft. I'm going to let somebody else take care of the money. And I was okay with that until I hit the point when I wasn't.
Same.
Hey guys, if you'd like to learn more about the infinite banking concept and how to flow your capital through your own financing system, my team and I are here to help. With over 35 years of experience, we can guide you in building a properly structured whole life policy tailored to you and your family. See the scheduling link below. Now, back to the show. The one thing I love when I listen to you guys is it's everybody's got their different approach. And none of this is, what I would say about this podcast is it's not investment advice. It's more along the lines of what I try to get is their investment story. So it's not, because really with infinite banking, it's really, we come to our own conclusion. But the one thing I love about your guys, it seems very similar, is your investing approach and with lending. Like, what is like the ideal investment that you would do with your policy?
Ooh, I'll go first, Dave, I think. Well, one, it's a secured investment. It's backed up. We always talk about on our podcast, right? Thinking like a banker.
Mm-hmm.
When anyone that's gone through the mortgage process, right, especially since Dodd-Frank, since that, post 2012-ish, it's a nightmare, generally. Try to do a construction loan or a development loan like you might do, or it's a nightmare, right? You have to even give your children's blood samples and stuff. It's ridiculous. So anyway, but you think like a banker, right? So I want some good collateral. I want a decent rate of return. Return of capital is always at the top of mind, right? It's the most important thing to me. If I get nothing back, I want the principal investment back, right? Or the loan. So something like, real estate is great. If I can control it, business is great, especially if I can be involved with it and control it. So things like that. I've done loans to my friends, to just personal friends. I did loans to Dave, and it was a real estate business that he was involved with. And of course, he's a guy that I can make a handshake deal with, right, and feel good about it. And I would say that is my criteria. If I can do a handshake deal with somebody, we do paperwork, of course. We do promissory notes and personal guarantees and stuff like that. But if it's the type of person that I feel comfortable with making a handshake deal, then that's the kind of investment that I want to do. I don't have any money in the stock market. I do other things. And some of that, some people like to do that stuff. They do options trading. They do all this, that's the new hotness right now. That's fine. They can do all that stuff. It's just not in my investor DNA. I prefer just kind of the hard asset transactions with collateral.
One thing I like what you said is really to get your money back. That's like very underrated. Everybody wants to swing for the fences, and then
we tried,
but I can tell you,
didn't work.
The times I have lost sleep has not been when I don't know if I'm going to make a return. It's when I feel like I'm about to lose my money.
Right. That's right.
So it's like, what's the most valuable thing I have? And it's really sleep.
Let me add one thing, and this is going to get to the IBC and the dividend paying whole life stuff and putting money there where you can get at it, where it's going to grow predictably. But as the policies age, and you're very early in your process of capitalizing, but when you start to get some mature policies, where every dollar is making $1.50 or $1.25, $1.75 of cash value in that same year, that becomes a wonderful place to put money. Right. And that's what's essentially happening is that's you getting more and more involved in the business of banking and controlling that function. Eventually, other things are going to look way less appetizing to you because you're like, wait a minute, I'll just make up a number. I'm going to pay a $10,000 premium this year and the cash value is going to go up by $13,000 or $15,000. I just need to continue to do what I'm good at, whether it's real estate stuff or business development, whatever you're doing. And then the other business that you're now in is banking. So things, and you're going to see this as you go through life, 5, 10 years from now, how you think now is going to be different 10 years from now. You're going to look back and be like, man, I wouldn't have done those things probably. Now I've got these policies and they're so efficient, and what a great place to just put money. So that's been my experience.
And I think the other thing that it comes down to, the people that I've seen that are experienced, it's like you have the people that are trying to figure out the arbitrage, which I feel like that is totally a waste of time, in my opinion. It's kind of like there is arbitrage, but it's like that's not what we're talking about. I think it's the volume of interest that really adds up with what you're talking about. It's like, how many times has the money turned over and come back, and then you're able to redeploy it is really the most valuable part. It's like the volume makes the interest expense almost very small.
Yep. And before Dave goes, there's all these people with these fancy calculators and spreadsheets. I don't do any of that.
Yeah.
I agree. I understand.
Although I will speak to that. I did create a calculator recently to illustrate policy loans.
Yeah.
Because of the way they're paid back. It's a principal-only loan, essentially. It's accruing interest in arrears.
Yeah.
But it's every payment you make back towards that loan is going towards principal. It could differ from company to company. But in general, the companies we use, it's going directly back towards principal. And that makes a huge difference in volume of interest over time. If you're making regular repayments, it might be 6.5% interest. And somebody says, oh, well, why would I borrow from the life insurance company at 6.5%? I can go over to the bank and get 4%. That makes a lot more sense, right? Well, maybe not, because you can't, it's like looking at everything from just one sight picture, like through a soda straw. You're not seeing the big picture. That's 6.5% interest. If I'm making, say it's $50,000 loan I take, and I'm making $1,000 a month repayment to that, over the course of repaying that loan, my actual interest, the effective interest rate, is more like 3 to 3.5% because of the way the interest is calculated. So again, I'm like Paul. I don't spreadsheet a lot. A lot of people like to get to the nitty-gritty details on the numbers, or they think they do, until they realize that doesn't really matter. Like, do you understand the philosophy?
Right.
Do you understand what it means to be your own banker? And I'll tell you what, when you're your own banker, Paul, and I say it all the time, the banker gets to make the rules.
Yep.
So when we do our own private lending, yeah, we get to dictate the terms because we're the bank. I get to dictate what the interest rate is, what the repayment schedule is for whoever I'm lending money to. And very importantly, to go along with that risk, to cover the return of my capital, is what's the collateral? And we've taken a lot of different forms of collateral from, real estate is the collateral if you're lending on it. We've created loans for everything from real estate to dump trucks. And the dump truck is the collateral.
Yeah.
I mean, I've used whole life insurance policies as collateral that, hey, I know at a bare minimum, if you never pay me back, whenever this insured on this policy graduates, I'm first in line to get paid back.
Yep.
As a kind of a last resort. It may take a decade or 20 years, depending on how long this person lives, whatever. At least I have a return of capital plan.
Definitely. And I think it really comes down to, like, you are the banker, so you make the rules. You also control the capital, which is underrated, So it's like, when you get to with what you were saying, is like, if you're paying the bank 4 and you say the interest rate's 6, I mean, the arbitrage really doesn't matter, because it's like, what's the cost of sleep? What's the cost of not worrying about it? And when capital flows into your system, you're able to take care of the loan. It's like, as long as you're being an honest banker, it kind of, it flows through to where you're able to really be control of your situation. You own the situation compared to being a product of the situation, so.
Yeah. Now, you make a great point that it affects every part of your life. Money does,
Yeah.
right? What's the number one quoted reason for divorce in America? It's money problems.
Yeah.
Well, I mean, the very first time I ever took a loan was 6 years after I was capitalizing policies, just because I didn't have a need for one. And then I flipped my first house. And I took a loan to fund the rehab. I used hard money to do the purchase and took a cash value loan to fund the rehab. Contractor says it's going to be 2 months in and out, done deal. Cool, let's do it. 9 months later, I finally sold the property, didn't make a single repayment to the insurance company during that 9-month period of having that loan out. And they didn't call me. They didn't knock on the door. They didn't interrupt my sleep. They didn't send me hate mail. They didn't care. When I sold that house 9 months later, I got cash back and I repaid the loan. Done. And then it was available for me to use again on the next flip, which I got much better at doing, surprisingly. You lose $11,000 on the very first flip you ever do, you're probably going to do a lot better the second time. And I never lost money again on a flip after that. But it was a good learning process. But it showed me, I didn't lose sleep over. I lost sleep over some stuff, but not the money, the loan repayment. I was like, that'll come.
Yeah.
So I slept better. It didn't affect my relationship. It didn't affect the way I treat other people because I'm under so much stress. So it really trickles down into every part of your life, having control over your capital and the repayment terms of a loan.
Paul, if you talk about it a lot on your podcast, but if you could talk about how you use your policy for your new construction loan, kind of like how you blended it somewhat.
Yeah. Well, first of all, having the amount of cash or cash equivalent, I would say, I had cash value, right, across, at the time, I think 10 policies, I guess, or 11, whatever it was at the time. This is 2023. Had I not, had Dave not sent me the book, had I not read it, understood it, took action, capitalized, opened up another policy, then opened up several more, and, I got into the business, did, fairly well. Had I not done those things and put my money, I'd stopped my 401k contributions in the Army cold turkey in 2021. So that freed up capital to deploy toward premium. Anyway, long story short, if I had not done those things, I had zero chance of sitting in the office where I am now because I had to have a 25% down payment to build this house, and I had to have 1 year's worth of mortgage payments at the bank before closing. So on top of the 25%, you have to add another 12 months of mortgage payments. So it was like, I had no idea that these were going to be the stringent lending and borrowing requirements, right? I couldn't believe it because everyone you buy a house, the mortgage process is bad, but it's not when there's not an existing piece of collateral, the house, the structure, just a piece of dirt. They don't like that, right? Because they're lending, the land was worth X and they lent me 5 times almost what my land was worth to build the house. Does that make sense? So it was, it's a risky loan in their eye.
Yeah.
But anyway, that took from soup to nuts, that probably took me 120 to 150 days because I had to switch lenders. I had to fire one. I was like, you guys are taking too long. I switched to a guy who I call my mortgage guy now. But anyway, so deploy that as the down payment, get to closing, put the money there, and then start refilling the policy loans. I'm continuing to pay my premium. I'm repaying policy loans. I just happened to sell some properties that I had purchased while I was in the Army and use them as rentals. I sold all those because I wanted to free up. I needed the cash, the equity more than I needed cash flow. Does that make sense? So that was very important at the time. Like, cash flow is great, but sometimes you just need the $50,000 of equity or $100,000 of equity, whatever it was. So I was able to refill my loans using those windfalls. And then I used those monies to financed the complete construction of the pool using policy loans. And I'm in the process of repaying those. So without the mindset change, and I think that is what is key in being open to something different. Whole life is terrible. Like, well, the only people saying that are the people that don't own any of it. Or maybe they own non-par like Dave and I used to, and we didn't really like those, and we weren't taught how to use them. They're okay. You can practice IBC with anything, technically. But this has just been a wonderful process that has added value to my financial life, and then that touches and that permeates to every other aspect of my life because we're just able to do so many. We finance our family vacations. We're big scuba divers. We go diving. And those are all financed through the policy, right? But we're capturing dollars as premium and then using the money today while we're alive. And then we have the massive death benefit, of course, to protect ourselves in case we walk out, get hit by a bus or struck by lightning or whatever. So it's a game changer. And that sounds maybe kind of cheesy, but it is true. And all of our clients will tell you that.
Yeah. Love the stories. And really, I've been thinking about recently, where there's lots of, people talking about infinite banking, but I would say that I'm starting to realize that there's very few that actually are practicing infinite banking. And when it comes down to it, this is what I'm trying to get to is I love listening to your stories. Like I can tell that you guys are actually practicing what we're talking about. Like there's almost always a loan out. There's always gonna be a loan out. There's always gonna be a new project, and then space to add more capital is really what it comes down to. One thing, I don't think you guys said it, but one thing that really, right before I got my policy, you guys quoted somebody. So we'll just say that is that you said something about getting so much premium to make you sweat. And that's pretty much what happened to me is I signed up and I really put my current cash flow into a policy. And then right after that, my income pretty much got cut in half, right afterwards. And then I got hit by 2 hurricanes. Thankfully, I had the policy is what I thought, So a lot of people are freaked out by capitalizing their policy, putting the money in, committing to a big premium. And I could tell you that my story is literally the thing you don't want to happen when you fund a policy is what happened to me.
Mm-hmm.
But as a real estate operator, you become like a deal junkie. So if you have any cash on hand, it turns into where's the next deal? And it could be maybe you should keep that as reserves. And I think that that's the other discipline that infinite banking creates is it creates a reserve to where you're able to do things with what Paul was saying or even David with the lending. And it's we actually are able to focus on our own personal skills, and then we can let our capital grow as if we were a bank, and that's the one thing I love, listening to you guys about with your stories.
Reserves are underestimated.
Yes.
Amongst real estate investors, especially, where banks love reserves. Banks love to loan money to people who don't need it. And why do you think they made Paul put a 1 year's worth of mortgage payments in the bank with them? Because what is the bank holding? They're holding a note. And that note is only as good as the guarantee behind it that it's actually going to be serviced. What do banks do with notes? They go sell them. And they make more money off of that note than they're making off of you from the interest you're paying on your 30-year mortgage.
Yeah.
Guaranteed, hands down. The interest you pay is nothing. They're making a lot more off the note. So if you come in with reserves and have cash, that makes their note stronger. They're happier to partner with you. You become more of a partner with the bank than a customer of the bank. And I think that's what Nelson's really saying. Don't be a customer of the banks.
Yeah.
Now, we've got other businesses. Paul and I are involved in another business where we are actual partners with the banks. Banks are competing for our business. Just had this experience this last week where we spoke with a bank, my business partner, the guy who introduced me to infinite banking, spoke with a bank. And by the end of that conversation, they said, hey, we want to throw our hat in the ring for your business because we have reserves and banks love reserves. Real estate investors, like you said, it's like they're allergic to cash. I got cash in my bank account. That's why they've made, frankly, Paul and I, we love real estate investors, but frankly, some of them are the most difficult clients we've ever had because they start with cash. By the end of the underwriting process, they've already put the cash into a deal. Sorry, I can't go forward with the policy. Well, if you never hold on to that cash and have a little bit of patience, you'll never be able to develop the foundation of banking that you actually need in your business and your life.
Yeah. It's odd too, because they understand CapEx. They've got a reserve there. They've got a reserve that their lender requires them to have, I'm sure. They're keeping that reserve somewhere, right? So what they don't understand really is the process of banking. And that's what, fundamentally, that's why it's becoming your own banker, right? It's not about life insurance. It's not about rates of return. It's about controlling the function of banking. And, you want to control, and you're discovering that, Glenn, right? Like you want to control as much of that as possible because when Florida got crushed the last few years with hurricanes. My parents live down there, and my in-laws are down there, and it's just, It's brutal. They got lucky, but many didn't. Like Fort Myers, is destroyed, right? So anyway, but it's funny. They're like, yeah, the opportunity cost, I'm putting the money in the policy, and I'm like, there's very little opportunity cost if you can structure the policy correctly. Like I can make a policy very liquid in the first year. 2 weeks after you open the policy, it'd be very liquid. So there's ways to do it without sacrificing too much liquidity and not compromising the structure of the policy, like doing a 1090 or something. So people don't know what they don't know, though.
Also, with the opportunity cost, it's underrated to have capital. Like the more capital you have, the better opportunities you get.
Yep.
And that's really what it comes down to.
It's exactly true. It's 100% true.
You make the deals so if somebody came to me and they say, I have $1 million and I'm investing it, guess who's making the rules? The guy with $1 million. If it's, when you're 25,000 or 50,000, you kind of just go along for the ride. But when it gets to be anything over 200, 300,000, they start to be able to make better terms for themselves, So.
Yep. I'm a perfect example of that right now with an opportunity that came across my neighborhood here. And I was able to say, I can bring the capital, but I want equity. I got it.
Awesome. Well, I know you guys have to jump off, but I appreciate you guys, being on the call, and I'm excited to finally meet you guys. And where can people find you?
Well, they can find us by going to the wealthwarehousepodcast.com. And I guess you can find us anywhere, YouTube especially. So a lot of content on YouTube. So just look up Wealth Warehouse Podcast on YouTube. And we got a great team putting out a lot of content for us daily. So, but
and they're clients of ours.
Yeah, clients of ours that became, essentially partners.
Yeah.
In a way. And we all now work together for win-win scenarios. We were talking just before we hit record, right? One of our clients. He's the one that introduced you to infinite banking in the first place, and he was our client. So it's a really cool community to be a part of. I mean, I don't have a client I don't like. That's a great thing about this. And Paul and I, just like you, we were not into life insurance, and then discovered IBC and said, oh, I'm going to use this because this is easier to sell. We only got into life insurance because of infinite banking.
Right.
That's the only reason. I love life insurance for what it is, but I would never try to sell life insurance for a living if it wasn't for infinite banking, because I believe so much in it and it's so useful for so many people. Otherwise, I'm just the most maligned salesman on the face of the earth. I think, people just picture we have slick back hair and wear cheap suits that don't fit right. And, like, what is it, Ned from Groundhog Day?
That's right.
Selling life insurance. So
he was trying to sell single premium, I think, to him.
Yeah. Hey, that was a cool thing back in the 80s.
Yeah.
It could have been very beneficial, but not anymore.
Nope.
But yeah, so no, you can find us anywhere, but we're always happy to be on here. Thanks for having us, Glenn, and letting us share the message and just get it out to more people.
Awesome. Well, thanks for being on the show.
Thank you for listening to the Capitalizing Your Life podcast. Please rate, like, subscribe, leave a comment, and share with someone who you think would enjoy listening.